Hi Gary, how are you?
Hi, Melissa. How are you?
Very good. So yeah, basically I want to
It's
just come
good.
on here and we will have a 15-minute interview on three segments. The first segment is a mortgage update, and the second segment is how does a buyer qualify or prepare themselves for mortgages. When they go shop for a house, they want to make sure they're qualified, right? And then the third one is what is the new any trend in the market for mortgages?
So let
What's
me talk a
happening?
little bit about the mortgage trending. So in the
By the way,
market, I
Gary,
think like for the last year, yes.
Oh, would you like to introduce yourself first?
Sure. Okay. My name is Gary because we know each other. So my name is Gary, last name Chen. So I'm a senior mortgage specialist from Bank of Montreal. So the main business that I do is actually I help clients on their mortgages as well as like bank accounts opening and overall financial picture. Okay. So we are trying to talk a little bit more about the mortgage trends. I think it's really also related to the real estate market as well.
Yes.
So what happens in your world, because you deal with real estate, obviously you see people buying detached homes, buying like townhouses, buying condos, right? Everyone has different needs on buying something, right? Sometimes they want to upsize, sometimes they want to downsize. What our mortgage trending, it's mainly about interest rate and the amount that they can really qualify. So what happens is, because when the market keeps going up, let's say when they're looking for like detached homes, okay? So because this year is very funny because it went up and then like now it's very steady, right? So because of the pandemic, everyone started to look for places and then the market went up quite a bit like since the first quarter, 2 quarters of the year, right? So when that actually changes the trending a little bit, because when clients actually looking for detached homes, because sometimes we can actually use the rental income if they have an authorized suite. So we can actually add a little bit more income into the calculation so that they could qualify a little bit more. Okay. But when detached market actually went up too much, right? And clients actually it started to affect their affordability, they start to look for townhouses. Maybe they cannot afford for a $2 million detached home. They start to look for $1.5 million like a townhouse. But it actually changes the dynamics of actually qualifying for the mortgage, because now you don't have the rental suite, and on top you need to pay strata fee. So the qualifying amount might not be the same when the property type changes. Right? So in that sense, like every time, that's why we always want to be like keeping very updated on what client is really purchasing, because different areas different. Because let's say when you're purchasing on Vancouver East and Vancouver West, like obviously in Vancouver East, you might actually see rental suite that is bigger. Maybe there's like two separate suites that you can actually rent out, like in Burnaby as well too. Lot size are a little bit bigger. So, but when you actually go back for the same price range on the west side, you might not even have a rental suite, right? There might not be even laneway to consider with, right? So we'll be missing those types of income when the property type changes or the area changes. Yes, that's more for the real estate trending. But then like when the mortgage actually, but sometimes without those rental income, the client might qualify $200,000 to $300,000 less when they're purchasing, okay? Plus the condo fee that they need to pay, or the strata fee that they need to be paying every single month, okay? Talking about the, I would say interest rate is a very interesting topic, because through the pandemic, right, our interest rate went to, I would say like, it's really low right now. So variable rate right now, we're actually going for like maybe 1.29, 1.39, okay? Variable rate right now is really low. And then, but for the fixed rate, let's say we're looking for like a 5-year fixed rate, we're looking at like 2.19, 2.29. So the whole market is expecting the interest rates to go up, right? So it's hard to say if you're purchasing a property right now, is it good for you on going for variable rate mortgage or a fixed rate mortgage? If you're really planning for long term holding the property, it might be better off going with the fixed rate, okay? But sometimes situation changes all the time. This is why I usually recommend my clients. Let's say we see a young couple, they're purchasing a 2-bedroom. We actually foresee them actually purchasing a new home, maybe like upsize to a townhouse or a detached home in the next like 4 to 5 years. So when they break the term, there will be a penalty involved. So when you're actually going with the variable rate mortgage, the penalty is always only 3 months interest. So it's actually easier for them when they're doing the calculation when they need to do the upside.
So I have another question. You know, right now, because of the low interest rate, a lot of my clients are upgrading from a smaller house to a bigger house. So in case like they haven't sold the house they have in time, what is the, like, how do people bridge a mortgage? How does it work for bridging?
So bridge loan, for the bank to actually qualify for the bridge loan, we need to have two firm contracts. You need to have a sale agreement. You also need to have a purchase agreement ready. But just the timeline that the purchase happened before the completion of the sale. Right. And the bank will need to qualify them for the bridge loan.
Oh, okay. So it's not automatic even if they sold the home.
It's not automatic even if they sold the home, right? So we need both contracts, right? So a lot of clients actually come to us. They actually want to take out a little bit more of a down payment or deposit. So in those situations, then we can actually do a refinance and take out the deposit, maybe $100,000 or $200,000. Take out the deposit first, so that they can make a deposit for the new home before they move on for the new purchase.
So what is the amount that you need to have in order to qualify for a good rate? Do you need to have 35% or 40%? What is the amount that someone should expect to have in order to qualify for mortgage?
The amount, like you mean like the down payment that they need
to have? The
down
payment, yeah.
So overall, when you're actually qualifying for the mortgage, basically we look into I think credit score takes a really, really big place into, and also like the banking products that you have with the bank. It's not like the bank one, you have like different type of products, but bank actually we have all these products because it actually fits your financial needs. Let's say if you have a TFSA account or your RSP for your retirement planning. So it's just the bank not trying to only have a mortgage with the bank, but when you also have other financial picture that the bank can see, so the bank can actually help the client easier, right? When they see you have RSP in the bank. Not necessarily that you have to have the RSP in our bank, but then it actually has the so that we know that you have you have a future of financial planning going forward. Because purchasing a home, it's just basically just one part of your investment, right? And you also have like maybe like 200,000 or 15,000 in your RSP account, so that it's for your retirement planning, that you can take the money out later on. Right. So with all those products, then you have a little bit more fallback. So the bank will feel more comfortable and actually offering you a lower rate.
Okay. Good. That's great. Any suggestion, for example, if somebody doesn't, for example, it has been really hard to qualify. So how does a buyer plan to make their tax return look better to get qualified in a couple years? Is that how long it takes to plan? Because it took me 2 years in 2019. It took me 2 years to get it. To make it look good.
So tax return is a very, very big topic. So the only one recommendation I always have for my clients: work harder and make more income. So when you make more income, then you can qualify for more mortgages, right? So, and in terms of tax return, I guess we're talking about self-employed clients, because when the pandemic goes through and then you have your own business, you have the choice to actually take out dividend or take out employment income for yourself. So you're trying to make a balance, because your business might not do too well through the pandemic, right? And then you're trying to take out income. So you actually take out less income on your personal tax return. Let's say your business make 200,000 and then you try to take out only $50,000 for your income this year because you didn't make as much than the previous years. Then that actually affects your income, because on your personal tax return showing less income, right? But also the bank, it's not only we're not really like tunnel vision. We just look into your personal tax return. So if you're a business owner, we also look into your business financials as well. So we take a look into your business overall. Is it really healthy? Is there more money that you can potentially take out more? It's just this year that you're taking less for your income. So the bank will still be able to qualify you for the mortgage.
Okay, that's good. We'll just go to 𝗘𝗩𝗔𝗟𝗓 Mortgages.
Yes. Thank you. But in order for them to pre-qualify, I would say just work harder.
Just make more money, right?
Just make more money
and buy it with cash.
Yes. Oh, savings is very, very important too, because a lot of clients actually, they want to have like, a lot of clients, they actually invest in stocks because they want to, but don't be too risky, right? Because stocks actually fluctuates as well too. Sometimes it's like up and down 20%. So some of the first time home buyers, they actually accumulated maybe $100,000 for their down payment, but all of a sudden like the market drops 20% and now they come down with like 80,000. So you're missing another $20,000 for your new home purchase, which is not like, you want it to be readily available for you for the down payment anytime. Right. Be a little bit more conservative on controlling your money. Yes. When you're planning to make a new purchase.
That's a financial planning topic.
Yes.
That's awesome. Thank you so much for your time. Yeah, so you've been helping a lot of my clients. You got my mortgage done when I had a problem with, for my construction. So really appreciate all your expertise. Thank you so much.
Not a problem.
Okay.
Thank you. We'll talk soon.
Yes.
Thank you.
Bye.
Bye now.
Hello, I'm Melissa Wu. Thank you for watching this video. If you like it, subscribe to our YouTube channel. Share it with your family and friends. And smash the like button. Thank you. 你好，我是胡建龙。如果你喜欢这个 video 的话，请你 subscribe to 我们的 YouTube channel， 然后跟大家分享，还有給我一個讚。謝謝。你好，我係胡錦龍。如果你喜歡呢個 video 嘅話，請你 subscribe to 我哋嘅 YouTube channel， 同大家分享，仲有點個讚。多謝。